JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 27th of November 2020. So yep, welcome everyone. Welcome to this last trading day for this week. But not the last, still not the last trading day for this month, because on Monday we still have a trading day in November. So yeah, welcome everyone to this last trading day of this week, guys. Before we jump into the charts, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, guys, the first one I want to pick up here is Nikkei. By the way, it's not probably going to be a very exciting day today. However, of course, let's see how it's going to go ahead with it. But for now, you can see that Nikkei, for example, closed in the positive territory. However, didn't really overcome the kind of the high of Wednesday here, which is around the 26,706 zone. So in other words, if we want to aim for some higher levels, then yes, we need to see a pop above this area first, and then we could go for higher levels, because such a move here would confirm a forthcoming higher high. The idea that I talked about previously, that if it corrects a little bit lower but stays somewhere above this 26,000 territory, then yes, we could see another possible move higher. You can see that, well, we did have that reversal. However, now the big question here is, can we overcome this highest point of this week, near the 26,706 zone? If we do, then my next target is the 27,251 territory right here. And just to remind you what that level was in the past quickly, that's the highest point, or sorry, the other way around. That's the lowest point of April 1990 and the highest point of 1991, guys. So again, keep your eyes on that one. In terms of the downside on Nikkei, well, I would need to see the index dropping below this 26,000 territory, and then we could consider a bit of a decline. Now, of course, something for you guys to keep in mind as well before I continue with the rest of the instruments here. Of course, as you know, recently we did get some, should I say, this month we did get a lot of news surrounding the vaccines. So different companies came out with different results, and of course, yesterday kind of was the first kind of hiccup. We were expecting that one. It should have happened, of course, because of course, as you know, the news about the AstraZeneca and Oxford University trials. So basically, let's see if all this is gonna stay like this. I mean, if let's say we don't get more good vaccine news, then and we still get, let's say, increasing coronavirus cases, now this is where markets might turn south a bit. I'm not saying that a full flush sell-off. No, it's just a normal decent correction. That's what could happen, unless the markets are going to get supported by some other positive news. However, at the moment, there's I don't see any other positive news apart from, like I said, the vaccine trials. Of course, like I said, if we will continue getting positive headlines surrounding that front, the vaccines, then yes, the market may continue pushing higher. However, if this, like I said, this first hiccup is not going to be the last one, then yeah, let's see if the markets are going to actually correct a little bit lower. But at the moment, nothing's indicating, and from the technical side, nothing's indicating towards that. We need some confirmation breaks first. Still, in order to consider even the upside, we would need to see a nice good pop here. For example, on Nikkei, a pop above the 26,706 territory. Yep, that's what we would need to see in order to aim for some higher levels. In terms of the downside, as I said, the 26,000 territory, that's what I'm keeping an eye on. But even then, I'll be very careful with the downside because we still have this 21-day EMA, which could provide a bit of support. Now, jumping into the German DAX, the index yesterday closed below the that 13,300 level that I talked about. But to be honest, yesterday's trading activity, I mean, it was very boring. Not much, unless you did a lot of scalping for small points and stuff. But that's fine. That's absolutely fine. It's your strategy, guys. But looking at this picture, I mean, first of all, I'm still going to continue monitoring that 13,300 level. And looking at the cash index right now, we can see that the price is kind of testing the 13,300 level, but slightly from underneath, I would say. So basically, let's see how this is going to play out. On the, let's say, shorter time frame, on the 4-hour chart, it could look as a positive, this little kind of stalling here, because we're still looking at, even on the 4-hour chart, we're still above the 21-day EMA. We're not far from this current highest point of this week, near the 13,347 territory. So in a way, still there is a good chance for this one to move higher. However, now looking at this picture, I would prefer to wait for a push above that. Let me just adjust this arrow very quickly, guys. So there we go. I would prefer to wait for a push above this 13,347 territory first, just to be on the safe side, because such a move here would confirm a forthcoming higher high, and yep, more buyers could join in. In terms of the downside, as I mentioned to you guys previously, still the more comfortable level is for me on a drop below the 13,000 mark. However, if you're looking for something maybe a little bit closer to, or should I say, what could happen earlier, maybe we could start looking at some downside if we get a drop below the 13,214 zone right here, which is marked by the inside swing high here of the 18th of November. And then, yep, maybe lower levels could be met. However, then we still have a little obstacle on the way. We have this little short-term upside line here, which could provide support. So that's why still, for me, the more comfortable level is on a drop below the 13,000 level. Now, jumping into DXY. So jumping into DXY, yesterday we saw a bit of a correction here to the upside. However, as I've mentioned to you guys yesterday, that if the index struggles to get back above, at least above the 92.24 territory, then yes, we'll still continue aiming lower here. You can see that yes, it did pop higher, but failed to move above this 92.24 and then reversed and back down. Now it's near the near this low. This is my target. This is what I was saying this week, guys. This is my initial target, the lowest point of September, near the 91.75 territory, roughly around there. But if that gets broken, now this is where it could turn out a little bit more ugly for the bulls here, and for the US dollar, and yep, further declines could be possible. So for now, be very careful, guys. Very cautious today. We do have a short kind of half day in the US due to ongoing celebration of Thanksgiving. So the markets will close. The US markets will close earlier. But yeah, keep your eyes on this one. Maybe we'll get some sort of surprises here. But for now, at the moment, to be honest, there's not much even in the economic calendar. So all the data was dumped on us on Wednesday. All the US data was dumped on us on Wednesday. So basically, for now, we're just going to continue observing this one and keeping an eye on these certain levels here. But my main target for now is this 91.75, which is the lowest point of September. Gold is stuck a little bit. Now, previously, when I looked at gold recently, I talked about this idea that, in a way, given that the commodity found good support near this 200-day EMA, it continues to provide good support, good hold up. We might see maybe a bit of a correction here to the upside. However, for us to consider that correction, I needed to see a push above this little hurdle right here, this 1818 zone. But as you can see, we're not really getting that yet, so maybe the break might not even happen. It might just go straight away to the downside. However, we're not going to rush into anything yet, because for me to consider that idea, I would need to see a nice good drop below the 200-day EMA here, and maybe also below the 1795 territory right here. And then yes, we could aim for some lower areas. But at the moment, I'm also just watching this one. Just want to see what's going to happen here, because in a way, even if it pops higher here, still it has this downside line taken from the high of the 9th of November, which could provide some resistance. So let's be very careful with this one, and yep, keep our eyes on certain levels. And the main one for me is this 1795 territory or this 200-day EMA. WTI oil, we had a nice correction yesterday. So after testing the area around here, let me just put this on the chart. So after testing the 46.24 zone, now you can see that the commodity is kind of in a little bit of a correction mode. I'll keep an eye. I'll continue monitoring this one because again, it's at a very interesting spot. So this little correction right now is quite healthy, I would say. It's fine. Maybe it could be a good opportunity for new buyers to jump in. We do have this steep upside line here. Now, don't get me wrong, it's a little bit tentative because in a way we might draw it this way here, capturing these levels. However, either way, guys, it's still a little bit tentative. We can draw it roughly like this and keep an eye on it, but still, yeah, that's what's on my mind right now here. And if we get a break of this upside line, that doesn't mean that the commodity could start drifting much lower again, but it could be a step towards the lower areas. But still, because I would need to see maybe a drop somewhere below this 43 territory marked near the high of the 11th of November, and then I could consider some further down move. But at the moment, guys, if it even breaks this upside line but stays somewhere above this highest point of August near the 43.75 territory, now that's where the bulls could step in again and drive this one higher. Now, the crypto world, Ethereum. So yesterday we had a nice decline here, and this is what I talked about yesterday, guys. That wait for the daily candle to end, because we did get a break here, but it seemed like a possible false breakout, and it confirmed that it was a false breakout. However, don't get me wrong, today we still have a full day to go through, and Saturday and Sunday, well, basically a non-stop movement here. But nevertheless, for now, what I'm going to keep an eye on here is this, of course, this short-term tentative upside support line taken from the low the 3rd of November. If it continues to provide decent support, wonderful. We could see this one pushing higher. If you're a little bit more on the safe side, cautious side, at least maybe wait for a push above the 548.50 level right here, and that level, if I scroll back into history here, basically that level marks the high here, the high of the 18th, I think, if I'm not mistaken, 19th of June 2018. So if we get a pop back above it, then yep, this could increase the chances for Ethereum to move back up here towards the, at least initially, towards the highest point of this week at 623.50 zone, and then we'll take it from there. But for now, I'm going to be a little bit more on the neutral side because we're very close to this short-term upside line. So let's see if this upside line will continue to hold. Now, AUDCAD. So I've looked at this one recently, basically in the beginning of this week, and what I was saying, that wait for a pop above this 0.9583 territory, and also not only a pop but also a daily candle staying above it, because as you can see, we kept getting these little false breakouts here, so neither of the daily candles were able to kind of remain above that area. So yep, for now it's yes, we are popping higher. That's wonderful, great news for the buyers. Everything is looking quite positive here, I would say. So in a way, we could continue targeting the upside, and probably I will do. But let's say if suddenly this somehow reverses back down and drops back below the 0.9583 territory, well, maybe this is where it could be the time to get a little bit more careful and cautious. Keep an eye on it. So because again, if it starts drifting much lower here, and let's say maybe if it drops somewhere below this little short-term tentative upside line drawn from the low of the 9th of November, then yes, we could maybe consider some further declines, potentially targeting maybe levels like the 0.95 zone here, or even below that, aiming for this other upside line taken from the low of the 21st of October. But for now, everything is looking quite positive. Let's continue targeting the upside, especially if the rate remains above the 0.9583 zone. USDJPY, so one of the interesting ones, and one of those that I've talked about in the beginning of this week. So we had a nice move initially on Monday, but as you can see, the remaining days kind of then it retraced back down. However, what I was saying, guys, to you, that yes, overall we're still trading below this downside line taken from the high of the 24th of March, but now don't forget that we are also trading above this little short-term tentative upside support line taken from the low of the 9th of November. So in other words, even if we see a bit of a drop here, if this upside line continues to provide decent support, then yes, higher levels could be met, guys. But at the moment, it's a little bit tricky here, so probably again a neutral stance for now would be ideal, because we need to see what the pair is going to do with this upside line. USDCAD, now USDCAD has a little bit of a different picture. Now overall everything's kind of leaning towards the downside. We are trading below this little short-term downside line taken from the high of the 29th of October. We are near this key support zone near the 1.2995. We're still above it slightly, but we're we're kind of very close to it. So in a way, all this is kind of leaning towards the downside, because also we could be maybe seeing here a bearish flag here. So if you see, we have a nice pole and we have this little consolidation here, and maybe now we could see this bearish flag working out. However, either way, guys, still the main kind of thing remains that we need to wait for a drop below the 1.2995 territory first, and then we could consider lower areas. So keep your eyes on that one. In terms of the upside, I will wait for, now previously I talked about this level. Now I'm going to drop my arrow here a little bit, and I'm going to aim for these levels here. So roughly somewhere around here. Basically, I'm gonna wait for a pop up of the 1.3113 zone somewhere around here, and then I'm gonna aim for some higher levels. Now, GBPUSD. So this is the another interesting formation that I talked about yesterday, if you remember. Basically, here I was saying that although we're still trading nicely above this key resistance area between the 1.3887 and the 1.3313, we could be potentially forming a possible kind of rising wedge pattern here. So maybe it's not an ideal one, but nevertheless it could be the case. However, what I was also saying, that don't rush into anything yet until we remain inside the pattern. We need that exit first, and to be honest, we would also not only an exit through this lower side of the rising channel, or rising wedge, but also maybe a drop somewhere below this 1.33 1.13 territory could do the trick for more sellers, and then yep, lower levels could be met. However, that's the case. But as long as it stays in the pattern, still it has a good chance to drift higher, guys. So that's why be very careful with that one. But if you want to be a little bit more on the safe side, you could wait for a push above the 1.34 mark right here, where the pair found good resistance this week. So in other words, a lot of waiting, guys. I do understand maybe it's sometimes frustrating, but we'd rather be safe than sorry. So basically, we're not right now at a very interesting spot where, in a way, it could also go and break the lower side of the rising wedge here, but it could continue trading in it. But if it will continue trading in it, then keep your eyes on this 1.34 mark. So like I said, a nice pop above it would confirm a forthcoming higher high, and more buyers could join in. And finally, EURUSD. So this one is basically it continues to flirt with these two levels. I mean, look at the significance of these two levels. I talked about this from the beginning of, actually from last week as well. So basically, for now, yes, we managed to overcome one obstacle, the 1.1880. So that's great. But as you can see, it struggled with it on Wednesday. It struggled with it on Thursday. However, the bulls, after kind of they even overshot at one point, overshot this 1.1918 level at the end of, or I wouldn't say at the end of the day, but yesterday, kind of at one point, the bears took control again and drove this one lower. However, this 1.1818 level, 1.1880 level did provide good good support. So from where the pair is now rebounding, and or actually already rebounded, now it's climbing again above this 1.1918 level. So of course, all this kind of activity is a bit more bullish than bearish. But if you want to be on the safe side, guys, I mean, first of all, yes, of course, I'll continue targeting right now the upside, but if it suddenly drops below the 1.1880 territory, now that's where it could turn out to be ugly for the bulls again. So yep, guys, for now, basically, again, it's on this one, it's a little bit more clear, I would say. So I am a little bit more positive on the euro dollar. However, let's see how this day is going to play out. But let's say my stop loss would be somewhere around here on the 1.1880. But again, that's what I would do. I mean, guys, that's you be the judge for yourself. You know yourselves better. So basically, again, this is a bit of a tricky one here. At the same time, don't get me wrong, it does involve risk. So depends, of course, how much are you willing to risk. But at the moment, the list is looking quite positive. Let's see if it can continue pushing higher, because again, DXY is also looking a little bit more weak, so which could help EURUSD to move further north. So, but again, anything can happen today, guys. It could be a bit of a weird day today. So, but don't forget that it's always Friday. It's Friday. Fridays are always weird in the market, and that's why don't get caught out before the kind of the weekend. So just if you don't feel it today, just leave it, and there's always Monday, we'll pick up on this one on Monday as well. But first of all, of course, we'll pick up on this one during my Traders Tea Time later on today at 14:15 GMT. If you want to join that, I'll run through a few instruments, just to see how everything's kind of getting along today. But yeah, guys, for now, that's the kind of the picture, the technical picture. So I hope you found it useful. Thank you very much for watching and listening, guys. I really appreciate your views, your likes, and your attendance, and I really do, guys. That means a lot to me. So yeah, thank you very much for that. So if you want to join me later on, please do. 14:15 GMT, Traders Tea Time. As always, guys, see you later. Thank you very much, and bye-bye.